How will the 2024 election impact your finances? This is a question many of us are asking. We're all aware that the decisions made in the political arena can ripple out, affecting various aspects of our lives, including our personal finances. But how does it all connect? Well, that's what we're here to explore. Let's start with the basics. Elections matter because they determine who's in charge, and those in power set the economic policies. These policies, in turn, shape the economic landscape, influencing everything from the stock market to taxes to job growth. Think of economic policies as the rules of the game. They set the parameters for how our economy functions. When these rules change, it's like a domino effect. One change can trigger a cascade of events that impact your personal finances. For instance, a policy geared towards promoting business growth might boost stock prices, benefiting those with investments in the stock market. Conversely, policies that increase corporate taxes could lead to higher prices for consumers or potentially slower job growth. Now, let's delve a bit deeper. The stock market is like the pulse of the economy. It reacts not just to hard facts and figures, but also to perceptions and expectations. So, elections, with their potential for change, can cause significant market fluctuations. Remember though, while the market might react in the short term, it's the long-term policies that really count. Then there's the matter of taxes. Tax policies can directly impact your wallet. Changes in tax rates, deductions, and credits can all alter your financial situation. Some might find themselves paying more, others less, depending on the policies enacted. Lastly, we can't overlook job growth. Economic policies can stimulate or stifle job creation. This could impact not just those looking for work, but also those hoping for a raise or promotion. So you see, the connection between elections and your finances is quite intricate. But don't worry, we're here to help make sense of it all. This video will break down the potential financial implications of the 2024 election into plain English. First, let's delve into economic policies. What are they, and how do they affect you? Economic policies are the strategies that a government implements to manage its economy. They're like a game plan, a set of rules the government uses to influence the economy. Some of these rules might deal with taxes, others with spending or regulation. Now imagine the economy as a vast, interconnected ecosystem. Changes made in one area often ripple throughout the entire system, and these ripples can make waves in your personal finances. Let's take a deeper look. Suppose a government decides to increase spending on infrastructure. This move stimulates the economy, creating jobs, and potentially increasing your income if you're in a related industry. But it's not just about the dollars and cents in your paycheck. The quality of life often improves with better infrastructure, which could mean less time stuck in traffic and more time doing what you love. On the flip side, let's say the government decides to raise taxes. While this might be a way to fund important public services, it could also mean less money in your pocket at the end of the day. Higher taxes can impact your disposable income and the cost of living, affecting your ability to save and invest. It's also essential to consider how economic policies can affect your investments. For instance, a policy that encourages business growth could boost the stock market, potentially increasing the value of your investment portfolio. Yet, a policy that leads to inflation could devalue your investments over time. Economic policies can be a double-edged sword, offering benefits but also posing potential risks. It's all about balance. The right mix of policies can lead to a thriving economy, while the wrong mix could spell trouble. In essence, these policies shape the economy, which in turn impacts your wallet. It's crucial to understand these policies, not just for your own financial health, but also to make informed decisions when voting in the upcoming 2024 elections. Now, consider the stock market. Ever wondered how elections influence its performance? Well, let's dive into it. Elections and the stock market have a nuanced relationship, one that's characterized by investor sentiment and uncertainty, two factors that can cause market volatility during election years. But why is that? Imagine yourself as an investor. You've got your hard-earned money in the game and you're constantly watching the market, trying to predict its movements. Now, throw in a major event like an election. It's like tossing a stone into a tranquil pond. The ripples are inevitable. That's because elections introduce a degree of uncertainty. Uncertainty in this context is about not knowing who will win the election and what policies they'll implement. Will the new administration be pro-business, or will they favor increased regulation? Will they push for higher taxes, or will they champion fiscal conservatism? These questions unsettle investors, and when investors are unsettled, the market can become volatile. Then there's investor sentiment. This is the overall attitude of investors toward a particular security or financial market. It's what drives supply and demand, and ultimately, the price of securities. During election years, investor sentiment can swing wildly, influenced by campaign promises and potential policy changes. For instance, if investors anticipate that the incoming administration will implement policies that could hamper business growth, investor sentiment might turn negative. This could lead to a sell-off, causing the market to dip. Conversely, if the expected policies are seen as beneficial to businesses, investor sentiment could turn positive, driving up market prices. But here's a silver lining. Historically, market volatility around elections tends to be short-lived. Once the election results are in and the dust settles, the market often stabilizes as uncertainty diminishes and investor sentiment becomes more predictable. So, elections can indeed make waves in the stock market which may affect your investments. But remember, while it's important to be aware of these potential fluctuations, it's equally crucial not to make hasty investment decisions based on short-term market movements. Instead, maintain a long-term perspective and keep your investment strategy aligned with your financial goals. Let's not forget about taxes. They're a crucial part of our financial lives, and elections can bring changes. So buckle up as we delve into the interplay between elections and taxes. Every election, candidates present their tax plans, which often include changes in tax laws and rates. These changes can have a significant impact on our finances. Let's say, for instance, a newly elected president decides to increase the tax rate for higher income brackets. If you're part of that bracket, you may see a decrease in your disposable income. On the other hand, if the president decides to cut taxes for the middle class, you could see an increase in your disposable income if you fall into that category. But it's not just about income taxes. The corporate tax rate can also be a hot topic during elections. A change in corporate tax rates can affect businesses' profitability. If the corporate tax rate is reduced, companies may see an increase in their profits, which they might then reinvest into their operations or pass on to shareholders through dividends. Conversely, an increase in corporate taxes could squeeze a company's profit margins, potentially impacting their ability to hire or invest in new projects. And it's not just about the immediate impact. Changes in tax laws and rates can influence our long-term financial planning too. For example, changes in estate tax or capital gains tax could affect your retirement planning or investment strategy. So you see, elections can have a profound effect on tax laws and rates, which in turn can significantly impact our personal and business finances. It's important to stay informed about proposed tax changes during an election year to understand how they might affect you. Remember, knowledge is power. By understanding how elections can affect tax laws and rates, you can better plan for your financial future. So the election outcome could potentially change how much you pay in taxes. And that, my friends, is something worth paying attention to. Finally, we have job growth. Can the 2024 election affect this aspect of the economy? Well, let's delve into that. Elections can have a significant impact on job growth, mainly through changes in economic policies. You see, each party has its own economic philosophy. Some might favor a laissez-faire approach, advocating for minimal government intervention. Others might lean towards a more interventionist approach, pushing for increased government spending and regulation. These philosophies translate into policies, which in turn shape the job market. For instance, a party favoring minimal government intervention might cut back on taxes, allowing businesses to retain more of their profits. The idea here is that businesses, with more money in their pockets, will invest in expansion, leading to more job creation. On the flip side, a party favoring more government intervention might push for increased public spending on infrastructure and social programs. This could also lead to job creation in sectors like construction, healthcare, and education. But it's not just about the number of jobs. Wage growth is another critical factor. Policies that strengthen workers' rights, like raising the minimum wage or enhancing collective bargaining, can lead to higher wages. However, critics argue that these measures might deter job creation as businesses grapple with higher labor costs. Then there's the question of unemployment rates. In general, a robust economy tends to have lower unemployment rates. But the link between elections and unemployment isn't straightforward. It depends on a myriad of factors, including the state of the economy at election time, the policies proposed by the winning party, and global economic trends. So the 2024 election could potentially impact your employment prospects and income growth. It's important to remember that these changes won't happen overnight, but over time, they can significantly shape the job market. So, whether you're a job seeker, a worker, or a business owner, it's worth keeping an eye on the upcoming election and what it could mean for job growth. If you enjoyed this content, give us a like, subscribe, and turn on the bell for all the latest content from Money Masters.